Hi everyone, and thank you for tuning in. In this video, I'm going to highlight 3 red flags facing Meta Platforms stock in 2022. Those are the headwinds from Apple's privacy policy changes, TikTok's rising popularity, and macroeconomic headwinds arising from the Russian invasion in Ukraine and the potential risks of recession. So let's get right into it. Of course, I wanted to start by highlighting that Meta Platforms had an absolutely incredible year in 2021. I've highlighted here in the year ended 2021, total revenue increased by 37% to 118 billion, up from 85.9 billion in 2021, and that of course helped net income rise from 29 billion to 39 billion, a 35% increase in net income. So they had a remarkable year. But that's before these headwinds really started to take effect. Apple's privacy policy changes were implemented late in 2021. I want to say the final quarter, and you can already see that the 3 months ending December 31, the Meta's fourth quarter, revenue grew only 20% compared to the 37% for the entire year. So you could see the implications from Apple's privacy policy changes already coming into play, but the magnitude wasn't as significant as it has been in 2022. Yeah, I also highlighted that ad impression and the price per ad were both robust for the full year 2021. Ad impressions increased by 10% year over year, and the average price per ad increased by 24%. So they're showing 10% more ads, and each one of those ads was selling at a price that was 24% higher than the previous year. So more ads and more per ad. That's exactly what Facebook, or Meta Platforms, I should say, likes to see. However, they started noticing those impacts late in 2021, and management was already the CFO when he was giving the outlook for 2022. He was already highlighting some headwinds that were he was starting to notice. They said they expect first quarter 2022 revenue to be in the range of 27 to 29 billion, which represents 3 to 11% growth. We saw earlier that they grew almost 40% in 2021. All of a sudden, they're going to grow just 3 to 11% in the first quarter. So a dramatic deceleration in the revenue growth rate there. And the CFO highlights on the impression side, they expect continued headwinds from both increased competition for people's time, TikTok, and a shift of engagement within our apps towards video surfaces like Reels, which monetize at lower rates than feeds and stories. What this means is, so the competition for people's time is obviously alluding to the rise in TikTok, the popularity in TikTok. So, in response to that, Meta Platforms, or Facebook, has launched its own version, its own short video version, which it calls Reels. And so far, they're not monetizing this new version at the same rate they were able to monetize the previous advertising platform, which were pictures, right? Prior to short form video, what was most popular on Facebook and Instagram were pictures. We were engaging with pictures. Now that that consumer behavior is shifting to videos, Meta Platforms needs to make adjustments to monetize from that format. So it's not just the flipping a switch and turning on the monetization in short form video. There needs to be a process, there needs to be time for them to be able to implement this. And while that's happening, that's a headwind to revenues while they're figuring it out. Management also highlights here that they're going to be lapping a period where Apple's iOS changes were not in effect. So the first quarter last year, Apple's iOS changes had not been in effect yet. So they're going to be comparing to that period when they went into the first quarter, and so that's why they were expecting lower revenue, because what those changes from Apple did was it made it harder for Meta platforms to track users' activity, to collect data. And when they are able to collect data, they could then sell targeted advertising, precise advertising. That way, they're not showing advertisements for a steak restaurant in Los Angeles, California, to a resident vegetarian in Miami, Florida. That's a wasted advertisement shown to that resident in Miami, Florida. That person is probably never going to go to the steak restaurant in Los Angeles, California. And so if advertisers feel that they can remove those wastes, then they're willing to pay more per advertisement. And so that's what was leading to the increasing price per ad. But now they expect that to start to diminish because of that impact. Okay. The CFO next highlights that they're going to experience macroeconomic challenges like cost inflation and supply chain disruptions that are impacting advertising budgets. So two things to unpack there. Number one is that when inflation is rising and the Federal Reserve is raising interest rates, that's creating uncertainty as to how consumer behavior is going to respond. Is there going to be a recession? And that uncertainty is creating a unwillingness from advertisers to invest in attracting and in enticing customers to come to their stores, because they don't know how shaky the economy is going to be. And so they're just pulling back spending and waiting and observing in the near term. Secondly, supply chain disruptions are another reason that's pulling back advertising demand. Think about it. If you're a store that is hardly keeping up with organic customer demand, your shelves are constantly sold out, and you're out of stock on so many different items, you're not going to advertise. You're not going to advertise because you don't want customers to come to your store just to find that the shelf is empty and then leave disappointed. So you're not going to spend money on advertising to disappoint customers. So you're going to reduce spending as well. So Meta Platforms is seeing those two forces, from those two macroeconomic headwinds, reducing demand for its advertising. All right. So this was as of December 31, 2021. So let's fast forward to March 31, and we noticed that revenue did come in that range that they highlighted, right? First quarter revenue at 27.9 billion. Management had forecasted between 26 and 28. And so revenue came in right in the midpoint of that range. And let's look at ad impressions and price per ad. So the number of ads delivered increased by 15%. However, the price per ad decreased by 8%. So already they started seeing that the price that they were able to charge for these advertisements decreased substantially, from an increase in the previous quarter now to a decrease of 8%. So first quarter impacts were already starting to feel. They're also already starting to feel it. So then the CFO, giving the outlook for the second quarter, said total revenue is going to be between 28 and 30 billion. The outlook reflects a continuation of the trends impacting revenue growth, including softness in the back half of the first quarter that coincided with the war in Ukraine. Now the war in Ukraine just made things all that much worse. It was already bad. The war in Ukraine made it all that much worse. And so now let's fast forward to the quarter, its most recently completed quarter, which was completed on June 30th. And we notice here total revenue 28.8 billion, which is like they forecasted. But that was a year-over-year decrease of 1% in its second quarter. That was Meta Platforms' first ever year-over-year quarterly decrease in revenue. Significant milestone for this fast-growing company that grew revenue at nearly a 40% compound annual rate over the last decade. Now it's showing a year-over-year quarterly decrease of 1%. So a dramatic pullback, dramatic headwinds facing Meta Platforms. And let's look at ad impressions delivered. increased by 15%, so they're showing more advertisements, but the price per ad now decreased by 14%, so the decrease is accelerating. It's going in the wrong direction faster, which is not what investors like to see. Bad news here. And the CFO highlights that the third quarter revenue is going to be even lower, between 26 and 28.5 billion. And the outlook reflects continuing of weak advertising demand that experienced in the second quarter, which is being driven by broader macroeconomic uncertainty. And the CFO highlights that they're going to start to reduce expenses. They brought expenses down to 85 to 88 billion from 87 to 92 billion, so bringing down expenses between 2 and 4 billion because of these lower than expected revenue and bigger than expected headwinds from these red flags facing Meta platforms. That said, I don't want investors to take this news and say, "Oh my gosh, it's time to go sell the stock." That's not what I'm saying. That's actually, it's arguably, all these red flags, all these headwinds are arguably already priced into Meta Platform stock. The stock is down nearly 50% off its high, and it's trading at the cheapest valuation it has traded for in its history. It's trading at a price to earnings around 11. And so this is not the time to be selling Meta Platform stock. This video was just to highlight the headwinds that it's facing and to inform investors why the stock is down so much, rather than trying to inform investors to sell the stock. If you're interested in if Meta Platform stock is a buy, I have a video on that which I'll link to at the end of this one. But please do not panic and sell Meta Platform stock here. It's arguably, these headwinds are already priced into the stock. This is just this investors should just highlight this and keep an eye out for it and monitor these trends and be ready to pounce on the opportunity to buy this stock going forward. Okay, so that's all I've got for Meta Platforms and the 3 headwinds. Let me know what you think in the comments down below, and I'll see you next time.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.